Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 399 on October the 30th, 2025. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on Sealsq Corporation, Lumen Technologies, and Intel Corporation, and we discuss three new trades on FuboTV Inc, Nokia ADR, and the iShare Silver Trust ETF. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. Now, today's show is being recorded on Thursday, October 30th. All prices are from the close of business today. The Dow Jones Industrial Average gained 315 points so far this week, closing at 47,522 points on Thursday. The S&P 500 index is up 30 points, closing on Thursday at 6,822 points. And now it's time for the topic of the week. The topic of the week is low risk, high returns. If you could sum up in one statement the goal of every trader I have ever known, it would be free money. Now, if any of you know where to find some free money, please email me to the email address previously mentioned already in the show. The next best thing to free money is finding a trade that is low risk and high return. For instance, a trade that offers a 30% return on a small amount of capital is beautiful. I recently saw a trade that would lock up $150 and pay me $50 for 3 weeks of risk. That's why I said low risk. There's still risk involved, but it is limited. In this particular scenario, I could sell the 1/2 strike put at 53 cents. The stock was trading at $2.38 at the time, roughly. Now, this was an out-of-the-money put that would tie up $150 and allow me to bring in $53 per option sold. Now, if the stock fell below $1.50, I would have to buy the stock for $1.50 per share. I would then sell a call option, and the call options also had relatively high prices. So in a matter of 2 trades, I would cover 2/3 of the price of the shares of the stock. So on the show, I've always talked about covered calls. I've not discussed cash secured puts. A couple people have recently suggested that I add these to the trades that I show on each weekly podcast. So starting next week on episode 400, I'll start discussing cash secured puts. I will increase the outlook each week from 3 trades to 4 trades all in. So along the way, this should add another low risk, high return option to the show. And hopefully it will also increase the level of understanding for all of the listeners. And I really do appreciate you guys listening. So let's go ahead and get into the review of last week's trades. We're going to start off with the covered call on Sealsq Corporation, symbol L as in Lima, A as in Alpha, E as in Echo, S as in Sierra. At the time, the stock was trading for $7.03 per share. I looked at buying that stock and selling the November 7/2 call at 75 cents, hoping for a return of 17.35% in 4 weeks. Now, shares of Sealsq Corporation lost 17 cents, closing on Thursday at $6.86 per share. The call option we sold lost 5 cents, leaving us with a net loss of 12 cents so far this week if we were to close the trade out immediately on Thursday's prices. Now, the stock price is nearly 60 cents above the break-even price for the trade, which means we're still in the price range that makes this trade profitable. So no adjustments are needed just yet. I'll certainly keep an eye on stock over the next 3 weeks, just in case anything changes before the trade closes at expiration. Next up, I looked at a credit spread on Lumen Technologies, symbol L as in Lima, U as in Uniform, M as in Mike, N as in November. At the time, the stock was trading for $8.08 per share. I looked at selling the November 8 7/2 put spread at 20 cents. That could give us a maximum possible loss of 30 cents per spread. Now, shares of Lumen Technologies have jumped $2.25, closing on Thursday at $10.33 per share. The out-of-the-money put spread that we sold is now even farther out of the money. The stock price is roughly $2.50 above the break-even price, which means this trade is working out just as planned so far. No adjustments are needed at the time of this podcast, but remember, we still have 3 weeks left until expiration, so you cannot assume the stock will stay here for the next 3 weeks. Have a plan and keep watching the stock price until it's either time to close the trade early or until expiration. Remember, if you stay ready, you don't have to get ready. And then our final trade from last week was a debit spread on Intel Corporation, symbol I as in India, N as in November, T as in Tango, C as in Charlie. At the time, the stock was trading for $38.27 per share. I looked at buying the November 37.5 38 call spread for 33 cents. That could give us a maximum gain of 17 cents, or that's a 51.52% return in 3 weeks. Well, shares of Intel picked up $1.85, closing on Thursday at $40.12 per share. The in-the-money call spread that we bought is still in the money, and the stock price is more than $2 above the break-even point, which means not only do we not need to make any adjustments, but this trade is also working out in our favor. So continue to track stock over the next few weeks and make sure you have a plan on how to exit or take profits early if needed. So far, so good on this one as well. So that's it for the review of last week's trades. All new trades on today's show will use the November 21st expiration for monthly options in November. That means they only have 3 weeks until expiration. And as a reminder, the pricings on today's show use end-of-day pricing from Thursday, October the 30th. All of that being said, let's dive in. We're going to start off with our covered call. I'm looking at FuboTV Inc., symbol F as in Foxtrot, U as in Uniform, B as in Bravo, O as in Oscar. The stock has closed on Thursday at $3.65 per share. I'm looking at buying that stock and selling the November 4 call at 35 cents, hoping for a return of 19.18% in 3 weeks. Now you enter this trade by buying stock for $3.65 per share and selling the November 4 call at 35 cents. This trade makes the most money if stock prices finish above $4 per share. The break-even price on this trade is $3.30 per share. In real terms, the stock purchase will require $365 and you'll collect $35 for selling the option. Next up, we have a credit spread on Nokia, symbol N as in November, O as in Oscar, K as in Kilo. The stock closed on Thursday at $7.13 per share. I'm looking at selling the November 7 6/2 put spread at 17 cents. That could give us a maximum possible loss of 33 cents per spread. Now you enter this trade by selling the November 7 put at 26 cents and concurrently buying the November 6/2 put for 9 cents. This is a credit spread because we are selling the spread, and this trade makes the most money if stock prices expire above $7 per share. The break-even price on this trade is $6.83 per share. In real terms, you'll receive $17 per spread that you sell and have $33 at risk. And then our final trade on the week is going to be a debit spread. I'm looking at the iShares Silver Trust ETF, symbol S as in Sierra, L as in Lima, V as in Victor. The stock closed on Thursday at $44.34 per share. I'm looking at buying the November 43.5 44 call spread for 32 cents. That could give us a maximum gain of 18 cents, or that's a 56.25% return in 3 weeks. Now you enter this trade by buying the November 43.5 call for $1.99 and concurrently selling the November 44 call at $1.67. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices expire above $44 per share. The break-even price on this trade is $43.82 per share. In real terms, you'll pay $32 to enter the spread, and your maximum gain is $18 per spread. So that's it for this week's show. Thank you guys so much for listening. Thank you for following along with me on this journey as well. And hey, special shout out to those of you who have listened on YouTube as well. I'm really considering changing my YouTube format next week too. So we'll see. I'm planning a few different things for the 400th episode. Some of them will have to come towards episode 401 as well. But either way, a few new changes. Let's mix it up to move forward into the next 400 shows. Who knows? So thanks again. I hope you guys have a fantastic weekend. And as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer, there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.